Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 15th, 2025, and we're diving into the first quarter earnings report of Equity Bank Shares. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Equity Bank Shares has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Equity Bank Shares reported a net income of $15.0 million for the first quarter of 2025, with an adjusted earnings per share of 85 cents. John, how does this compare to market expectations?
Equity Bank Shares exceeded the analyst's forecast of 82 EPS, which is a positive sign. The net interest margin also expanded to 4.27%, driven by non-recurring, non-accrual reversals. This indicates strong profitability despite some economic uncertainties.
And what about their loan growth?
The company reported an impressive annualized loan growth of 15.2%, closing the period with $3.63 billion in loan balances. This growth is a testament to their effective customer relationship strategies and market expansion efforts.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Equity Bank Shares reported non-interest income of $10.3 million and non-interest expenses of $39.1 million. How does this impact their overall performance?
The increase in non-interest income, particularly from bank-owned life insurance, is a positive contributor. However, non-interest expenses rose due to higher payroll and incentive accruals. Despite this, the efficiency ratio remains competitive, reflecting effective cost management.
And what can you tell us about their future outlook, especially with the merger announcement?
The merger with NBC Corp of Oklahoma is a strategic move to expand their footprint in new markets. This, combined with their strong capital position, positions them well for continued growth in 2025 and beyond.
Credit and asset quality. Let's discuss credit and asset quality. Equity Bank Shares reported a provision for credit losses of $2.7 million. How does this reflect on their asset quality?
The provision for credit losses increased due to loan growth and economic uncertainties. However, non-performing assets decreased to $27.9 million, or 0.5% of total assets, indicating an improvement in asset quality. The allowance for credit losses also increased slightly to 1.3%.
So overall, would you say their asset quality is stable?
Yes, the reduction in non-performing assets and the strategic provisioning for credit losses suggest that Equity Bank Shares is maintaining a stable asset quality amidst market challenges.
CEO insights and strategic initiatives. Equity Bank Shares CEO Brad S. Elliott mentioned their dual-pronged strategy of organic and acquisitive growth. How is this strategy playing out?
CEO Brad S. Elliott emphasized their strong start to the year, driven by customer relationship expansion and strategic partnerships. The capital raise has positioned them well to support growth, and their teams are aligned and motivated to build a premier community bank.
It sounds like they have a clear vision for the future.
Absolutely. Their strategic initiatives, including the merger and capital management, are well aligned with their growth objectives, setting a positive tone for the rest of the year.
Key takeaways. In summary, Equity Bank Shares has delivered a strong performance in the first quarter of 2025, with net income of $15 million and an adjusted EPS of 85 cents, beating the forecast. Their strategic initiatives and merger plans indicate a promising outlook. Thank you, John, for your insights.
Thank you for having me. It's been a pleasure discussing Equity Bank Shares' performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Equity Bank Shares' performance in the comments below.